Yeah. Hello, everyone. Thank you very much for joining. Welcome to our Lunch and Talk Roundtable 2025 May edition. Today we have very special guest and even more interesting topic. But before we start, let me get to the uh, housekeeping notes. This event is recorded, so if you don't like to be recorded, then please drop out from the call. The video will be posted on our YouTube channel where you can watch our previous lunch and talks from previous years. Um, Today we have a special guest, just like I mentioned. His name is Pascal Schneidinger, CFA. Today he is going to be talking about blue chip art, investment opportunities, and challenges for portfolio diversification. Pascal is a CFA charter holder who also holds Bachelor of Science in Finance and Accounting from the Wharton School at the University of Pennsylvania. He worked in investment banking and private equity in New York and London before becoming a serial entrepreneur. In 2022, he founded the art investment firm Partasio, which he runs from Zurich as the company's CEO. Also, this would not be possible without our partners and supporters, namely Tatra Banka, ČSOB, Erste Asset Management, and NEY ProRate, KPMG, Quantic Financials, CMS, Allen and Overy, Sherman, and VUB Banka. Thank you very much to all partners that they stick with us and they go with us. And now, without further ado, please let me hand it over to Pascal. He will take your questions after his presentations. Thank you.
Thanks a lot for the intro. Thanks for giving me the opportunity to talk to you guys today. So you've already introduced me, so there's not much I need to talk about, but maybe just briefly before I start, just for your information, I will be talking about the art market, and I am not from the art market originally. So my background is really in finance, investments. I was in investment banking, I was in private equity, and then I spent a fair bit in China, having my own company in a very different industry. We started Partasio about 3 years ago. So what I will do is I will walk you first through the art market, through the global art market and its dynamics, and then explain to you how one, in our view at least, should invest in the art market. I'll be relatively quick, and I think given it's a very simple, straightforward topic, I hope that there will be a lot of questions afterward. Let me share my screen. Okay, I hope you can see my screen. So let me talk about the key things of the art market first. The art market is very large. It's estimated at around 2.2 trillion US dollars. Of course, that's an estimate. Nobody really knows how large it is in reality. What is important to note here is that this is the figure or the amount that is in private hands. It excludes whatever art is displayed in museums. The art market is very global, as you can see here. I think that's not surprising. The US is the largest market, but China and Europe are very relevant markets as well. If you look at the different time periods, you can see that post-war art, which is art created after World War II, so after 1945, is about half the market and is obviously the segment that is growing the fastest. In terms of categories, probably not very surprising to most of you, paintings are by far the most important category, comprising about 2/3 of the art market. Sculptures, photography, drawings, etc. are smaller and less relevant categories. If you look at financial returns, most of you have probably seen these type of figures in the media in the past. Art outperformed most global stock markets quite significantly over the last 20 plus years. And what, in my view at least, is almost more important is the table here at the bottom, which shows the correlation between art and pretty much all large traditional asset classes. And as you can see, the correlation is very low. Now, that being said, I'm a very analytical person. I assume most of you are as well. And I think with numbers, you can always prove whatever you want to prove. So I think rather than looking in a lot of detail at these very scientific figures, it's a bit more important and interesting to look at the actual dynamics of the art market. And then it's pretty simple or pretty easy for you to have an opinion as to the correlation between art and most traditional asset classes. Art does not generate cash flow. So as a result, value really depends on supply and demand. And therefore, I really think it's important to look at these supply-demand dynamics. And on the demand side, you can see this here quite well. I think it makes sense if you think a little bit about it. On the demand side, art correlates very strongly with wealth. So the more wealthy people you have, the greater overall wealth is. Generally speaking, the higher the demand for art is. On the supply side, it very much depends on what category you focus on within the art market. As you will see, we focus really on the top end quality only, and the top end segment, obviously, or maybe not obviously for some of you, is generated by artists who are oftentimes not alive anymore, in which case they obviously do not produce anymore, or they're at a very advanced age. So that means that at least on an artist level, supply is stable to even decreasing. And that means that you're generally speaking in a segment or in the market where demand increases because the wealthy get wealthier, whether you like it or not, and supply is stable. And that's the very simple reason why prices of at least top quality art have been going up in a relatively straight line. It's not a very sexy market, to be honest. It very rarely goes up in a steep line. It very rarely goes down. It goes up by, let's say, inflation plus a little bit, but that's really the reason why the effective or the real life correlation between art and traditional asset class is very limited, simply because the dynamics are very, very different. In terms of asset allocation, that may be a bit surprising to some of you, but for ultra net worth individual collectors, meaning very wealthy people who have this art market specific access, you can see that art actually has been a very important part of an asset allocation. In fact, about 60% of these people have at least 10% of their total assets invested in art, which is quite significant, and it's been going on for generations. So if you want to summarize a review, the art market is very large, it's very global, it has been performing very well over the last 20, 25 years. It has very low correlation with traditional asset classes, which means it's good for diversification. And on top of it, it's a really important aspect or component of asset allocation of very wealthy people. So what you should really, kind of conclude from that is that art is for all of you already an important part of asset allocation. But the reality, of course, is that that's not the case. For very, 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 very few people actually have art as part of their asset allocation. And if you think about why that is, there are multiple reasons. Number one, the reality is that 95, maybe even 99% of art have value of zero or close to zero. I always say for most art, you should buy it because you like it, because you want to hang it, because you have some kind of emotional attachment. But please do not think of it from an investment perspective, because it's like buying a car. In fact, you should probably amortize it down to zero in your brain because it has no financial value. What that means is, if you want to invest in art with financial considerations in mind, you should focus on the absolute top segment. We call it blue chip because there you really have some kind of institutionalized supply and demand, you have real liquidity, you have real pricing. Now, the issue with that segment, and that's the reason why I assume most of you do not have art as part of your asset allocation yet, is that the entry barriers in that segment are very high. And there are essentially two types of barriers. There's price. These paintings are very expensive. So in reality, you need to have an asset base of, say, 100 million plus, whether it's US dollars or euros or Swiss francs, doesn't really matter. But you need to have a very, very large asset base that already excludes the vast majority of people. The second issue, and that's an issue you should not underestimate, is that the market is very inefficient and opaque. And that means you need to spend a lot of time and resources to get to the correct information. You cannot download a market research report by Goldman or JP Morgan or whatever, and the few reports that are out there are of very questionable quality in my view. So as a result of this, although art should be a really interesting part of an asset allocation for pretty much all people or all investors, that's not the case yet. And that is exactly what we're changing at Partasio. What we do is we give investors for the first time the opportunity via a simple but very professional investment solution to add top quality art to a financial portfolio, thereby diversifying a portfolio, generating good risk-adjusted returns. And then, of course, another aspect that I haven't mentioned yet at all is that art is not a boring financial product. It's actually a cultural good. So there are a lot of intellectual, cultural, emotional values to it as well. So let me show you, after giving you this kind of broad overview of how the art market works, let me show you how we invest in art, because obviously that is the way we believe people should get exposure to art as a financial investment. First, in terms of time period, you can see we only focus on works after 1945. So let's go back. Why is that? So here you can see, as I said before, it's certainly the largest part of the market. And another thing that you should not underestimate, the issue that you have dealing with older art is really due diligence, meaning documentation is oftentimes not perfect anymore, which means that you really run the risk of buying a fake, which is somewhat suboptimal if you do it for investment purposes. The second issue that we know quite well, unfortunately, in Europe is where was the art during World War II? Also an issue we do not want to deal with, and that's why for us, only art created after 1945. Maybe one more point before I actually go and focus artists, we only focus on paintings. And go back again. Very obviously, because paintings are by far the most important category, comprising about 2/3 of the market. So we focus really only on paintings after 1945 for due diligence reasons and because it's the largest part of the market. And now we get to a very, very important point, which is the focus. In my view, or in our view, you should focus, as I mentioned in the beginning, only on the top segment because you have somewhat of an institutionalized supply and demand. That means for us, we only focus on artists who are long-term relevant, both from a financial and art historical perspective. So for those of you who are in the financial industry, that's kind of a conservative value investing approach, meaning we go after the guys with a long track record, low volatility, low downside risk. And to really identify who are these long-term relevant artists, we created a bunch of criteria, both quantitative and qualitative. On the qualitative side, these are things like, is the artist represented by a large international gallery? Or very important, is the artist globally relevant? Meaning we only focus on artists who are relevant in North America, Europe, and Asia. And relevant really means, are you in the big museums? Are you in the important collections? Are you really part of art history in these various geographies? On the quantitative side, these are things like sales volumes of extended periods of time, auction records, etc. So in summary, all parameters you can only meet if you're truly long-term and globally relevant. Now, why is that important? Because in the top end segment, there is another sub-segment, and those are the young emerging artists. And if you want to explain those or describe those in financial language, that's really the venture capital of the art world. It's very volatile, it's very speculative, and it's really the opposite of what we want to do, because our objective, and I think the kind of the sanguine way to invest in art, is you should do it for diversification purposes, you should do it for good risk-adjusted returns, and because of the low volatility. And therefore, we exclusively focus on artists who meet all these quantitative and qualitative criteria. And as you can see here, there are only about 40 artists who meet these criteria. So it's a very narrow focus group, and these are naturally the most established, most relevant, long-term successful post-war artists in the world. So it's kind of the Dow Jones index, if you want to call it, of the art world. It's really the top guys who are very relevant and long-term established. Now, of course, it's not sufficient to only focus on these 40 artists and buy random paintings by these guys. I always compare it to real estate. If you buy real estate in New York, you cannot just buy randomly real estate in New York. You obviously need to buy good real estate in good locations. And the same goes for paintings. So it's not sufficient to buy paintings by these artists. You really need to focus on paintings that are of historical relevance within the overall work of the artist and that are highly commercial. I think it's pretty self-explanatory, but let's not underestimate the importance of that. Now, what is very important is we're not like an art dealer that sells you paintings. In fact, it's an investment solution. So we create portfolios. Each portfolio, when it is fully invested, contains 4 to 6 paintings by these blue chip artists. Why 4 to 6 paintings? Number one, diversification. We strongly believe that if you invest in art, you should be somewhat diversified within the art market. So do not invest in 1 or 2 paintings only. However, then you could argue from a purely quantitative perspective, well, why don't you include 13, 14, or 15 paintings in a portfolio? And the counter argument to that is partly an emotional aspect. We want to give investors the ability to build some sort of an affinity to the paintings and the artists they invest in. And we have a lot of initiatives around that. We can go into details if you have questions about that. But in summary, we feel that with 4 to 6 paintings, you can still identify yourself. You can still learn about the paintings and the artists that you are invested in. With 15 paintings, that becomes quite tricky. That being said, diversification, as mentioned previously, is of ultimate importance. And that's why I always joke that if a curator were to look at the portfolio, the goal is that they get a heart attack. It's not supposed to look nice with each other. In fact, the portfolio is supposed to look really ugly because it's not supposed to be a visual, whatever phenomenon. It's supposed to be financially diversifying. So it's very important that you have different time periods, different types of styles, different geographies, etc. So it's not really looking beautiful with each other. In terms of purchase price, we focus on paintings between 500,000 and 3 million. Why is that? As you may have read in the media, a lot of these so-called blue chip artists, they also sell paintings for 10, 20 million plus. And while that may sound attractive, if you want to sell a 10 or 20 million painting, good luck. It's not so easy anymore because you do not have many potential buyers anymore. And the 500,000 to 3 million segment is by far the most liquid segment in the art market, which for us, both at acquisition and at sale, is very important. In terms of holding period, we are, on purpose, very conservative, and we communicate kind of a maximum holding period per painting of 5 years. What is important is that in our structure, whenever a painting is sold, the net disposal proceeds from that sale are automatically distributed back to investors. So for instance, if you sell a painting after 2 years, you get a distribution. If you sell a painting after 3 years, you get a distribution, etc., until the last of these 4 to 6 paintings is sold, and then the investment structure is closed. You may, or maybe you will have questions about the holding period, but just kind of why we say 5 years is 2 main reasons. Number one, to be honest, we want to scare people away. We don't want that people who have an investment horizon of 1 year invest into this, because those are the people who give you problems. The second reason, as I mentioned in the beginning, I'm from the private equity world, and at least in my view, one mistake that the private equity world still does from a marketing perspective is they have their 10-year funds, and then there's extension. And that creates, in my view at least, unnecessary negative emotions. So we want to create the opposite. We tell people 5 years. In reality, we have a somewhat significantly shorter holding period, so we want to create positive and non-negative surprises. Now we get to the two key things of the business, and the first one is sourcing. The art market, as some of you may know, it's an insider market. In fact, it's probably the largest legal insider market that still exists, which means if you're not an insider, be very careful. We are certain insiders, not because of me, but because of my partners who've been in the art market for the last 20 and 25 years. And what that means is we only buy off market. What is off market? Off market for us means we do not buy at auction, we do not buy at fairs, and what is quite extreme, we do not even buy paintings that ever traded at auction. We only go direct through our global network. That way, we don't pay the crazy high commissions you have in the art market. If you go to a large auction house in this segment, you pay between 20 and up to 30% in commission, which is quite significant. So we don't pay those commissions. And what that leads to, among other things, and that's the key reason from a financial perspective that I, as a non-art person, am in this business, is we have the ability to continuously buy at quite significant discounts to market value. And for financial people like me, that's quite crazy, because if you look at the stock market, or at least I think we don't even need to talk about the stock market, everybody has an opinion, but the fact is nobody knows anything because it's a highly efficient market. And even when it comes to private equity and venture capital, of course, there are some exceptions, but generally speaking, these markets are very competitive, which means that you buy at market, you have an opinion, hopefully you're right, if you're unlucky, you're wrong. And in the art market, it's not like this yet. It's a big if, but if you have the right network, access, and approach, you can still buy at quite significant discounts, which means you lower your risk, you increase your potential returns, and that's a very simple reason why the risk-adjusted returns in this type of investment, in my view, are extremely attractive. That's point number one that is very important. Point number two doesn't necessarily have that much to do with the art market, but it somewhat does, which is alignment of interest. In my view, it's a big topic or a big problem in the financial world because oftentimes there are lots of conflicts. And the reality is that unfortunately, in the art market, it's an even bigger problem because given the opacity of the market, there are tons of conflicts of interest. Just to name a few, art market experts, they usually run around, they do 5 or 6 things in parallel. You never know what they focus on, and that creates obviously a massive conflict of interest. So we said from the beginning, for instance, that my partners focus exclusively on Partasio. They're not allowed to do anything on the side that could in any way compete with what we're doing. That's very, very important. Should be kind of obvious, but shockingly, it's quite unique. And the other thing, and again, there are more examples, but the other key thing is in terms of how we make money, we make our money on the performance fee. And the performance fee is not based on a valuation or net asset value or anything strange subjective like that. It's based on actual sale. So if at the sale of the painting, there's a profit, we take a performance fee and otherwise not. And that's very important because the vast majority of our investors know not so much, if anything, about the art market. So they need to rely on us, number one, of being good at what we do, of course. And number two, that's very key, that we work 100% in the interest of investors. And that's why it's extremely important that we only make money if investors make money. And if investors for whatever reason would not make money, we're not allowed to make money. So again, I think the two key points of the business are A, alignment of interest, and B, the dynamics of the market. And last but not least, just that's a bit technical, I'm not going to go into too much detail, but the minimum investment, you can see we're at the moment doing it in Swiss francs. So sorry about you if you don't have Swiss franc or you don't like Swiss francs, so you should like the Swiss franc because it's probably the strongest currency in the world. In any case, it's 30,000 Swiss francs, which in euros is about 33,000 euros at the moment. So it's a quite low minimum investment. I'm not going to go into too much details of the structure. Of course, if you have specific questions about it, I'm happy to answer them. The important thing is that our investment is bankable. which means it comes with an ISIN, which means you can buy it via your bank and it shows up in your account statements. You do not need to sign any strange documents that you don't understand. It's a very simple and straightforward and professional investment process. Now, I went through this quite quickly because I think, in my experience, the most interesting part is to have a real conversation and to answer questions. I think it's probably a market that you've heard something about because you've all been to museums, I would guess, but most of you have never had any exposure to because of the high entry barriers that I mentioned. So I hope we can have kind of a discussion or, some interesting questions. And with that, I give it back to you and to questions.
Thank you very much, Pascal. And now is the floor for questions for anyone who wants to ask anything. Please unmute yourself and ask a question.
Don't be afraid.
Maybe as usual, thank you, Pascal, for a very interesting presentation. You answered at the last slide most of my previous question I note down, but for us also some past performance or performance indicators are very, very important. So this is also something to discuss.
Yeah, so I think, when you look at performance, and I'm kind of a no BS guy, if you look at it from a macro perspective, there's this index that I showed to you, which shows that the art market has historical annual returns of around 9%. If you look at the actual returns of the roughly 40 artists that we focus on, these real blue chip artists, you get more into kind of the mid double digits, so kind of 13, 14% annual returns. But the way I view this business is it's a bit different from your typical financial markets where you can do all your DCF analysis and you look at every number left and right. I think in the art market, if you want to be successful, you need to find the right balance between a purely analytical approach and a more qualitative approach. And what that means, in my opinion, is to be successful, you should not have a top-down approach, you need to have a bottom-up approach. And that's where this whole inefficiency comes into play again that I mentioned. The reason why I'm in this business is I love the fact that it's a very large market with crazy inefficiencies that you can take advantage of if you're an insider. And that way, you are basically able to lock in the vast majority of your profit at acquisition. And what that means is you take significantly less market risk than you do in other investments. If you go into the stock market or private equity, etc., the reality is if the market goes up, chances are you're going to make money. If the market goes down, chances are you're going to lose money. That's the way the world works. And in the art market, I would argue that you take less market risk if you're an insider because you generate or you lock in your profit on day one. Okay, so which means that, of course, we're not investing in artists where we feel like there's a negative development, obviously, but we're not investing into artists where we feel their market is growing by 10% plus, because by definition, then you take a risk. And that's why we go after artists that are very boring from a financial perspective and that have very low volatility, because we are very confident that the majority of our profit is generated in the beginning. So that's what I mentioned in the beginning. That's why you have lower downside risk and more upside potential. So to answer your question very concretely, what we tell people to expect in terms of annual returns, net of all the fees and all of this is, and I should say in Swiss francs, because in dollars it would be significantly higher, but in Swiss francs, it's high single digits per year. So somewhere between 7 to 9% in Swiss francs per year is what we tell people to expect from a realistic, conservative scenario.
Thank you.
Another question, Marek, please go ahead.
Okay, thank you very much for the presentation. I think that this is the interesting topic. Yeah, this is the broad discussion and question that what kind of asset class we should use in asset allocation and this, and there is definitely like biggest value on this low correlation on this side. Yeah, but we are still talking about very illiquid market, and we are talking about the market when there is I think the very skewed distribution, as you mentioned. Yeah, so I think the biggest value, or there is a very big value on the picking of the correct let's say investment and the paintings. I have a little bit I would like to little bit comment to this performance comparison. I think that it is not completely fair to compare the stock market performance in the beginning of 2000. We know that there was one of the biggest decreases, and to say that this is underperforming. So if the art market will deliver 10%, everybody will be super happy with the low correlation. But I think there is a huge risk that, let's say, 90% of the art market is delivering nothing. Yeah, so there is something that you have to pick correctly, and there is a 5, let's say, paintings you have quite big concentration risk that you should pick very carefully and successfully. But I think that like to me, like the biggest value is this low correlation and possibility to invest such into such asset classes. Understand that the liquidity and the concentration risk and, let's say, art picking risk is the nature of let's say this risk. But I'm not buying that there is a not market risk and there is no risk at all, and there is a mid conservative, let's say, double-digit performance. I think expectation, this is little bit, I think, too oversimplification.
I would
oversimplification of this. But I have 2 questions. Can you show us some, let's say, real track record of your art picking? This is the first question. And second question is, what is like, we are from the investment world, so something like total expense ratio of all of this. So we are investing 1,000 euros or let's say million euros, and what are the costs in the process? Yeah, to buy and sell the real painting.
So I will answer your questions in a second. Maybe first to your initial point, which I'm not fully disagreeing with, to be honest, right? And that's what I mentioned in the beginning. I think that 95 to 99% of art has value 0, right? Or extremely high volatility. And that's exactly the reason why you need to go after the most established artists, because they have a proper institutionalized global market. And there the liquidity is actually very high. I can go, the type of paintings we buy, it's very easy to sell. Do you necessarily get the price that you want? That's a different question. But you will never be stuck with the painting because the quality is very high, right? That's point number 1 I wanted to make. Oops, I have some issue. 1 second.
I fully agree. Like maybe liquidity is big, but question is that for what price and what are the costs of round trip? Yeah, like buy and sell.
Can you hear me?
Yeah, we can hear you.
Yeah, okay. Sorry, I had to change my settings. And then in terms of market risk, maybe you misunderstood me. My point was, I do not like market risk, whether it's in the stock market or the art market or the real estate market, because we all have an opinion on the market and we all know nothing, right? And what I like about the art market is that you take less market risk, not because there is no market risk. The reason why you take less market risk is because of the inefficiency. You can buy at quite significant discounts, so you do not rely on the art market going up. That's what I tried to say. I'm not saying that.
So I got it. So that's okay. I think that what you have is this like picking risk, like not like art picking risk.
Yes, exactly. That's exactly
right. The correct
that's
painting
exactly
with the correct author. Yeah.
Yeah. So let me give you actually a specific example, because I think that's what you asked for. Let me 1 second find one for you, painting, and that we bought, and then I explain you a little bit about it. And I think that may give you like a good indication of how we do things. 1 second, I just need to find it to share the screen. All right. Can you see my screen?
Yes.
Okay. So this is a painting we purchased. Let me give you a little bit of background, not too much cultural, but more financial. So Yoshitomo Nara, he obviously fits all the criteria to be one of these 40 artists we focus on. In fact, he's probably the second most important living Japanese artist. His record lies at above $25 million. So it's a quite big deal. And he was born, you can see in the late 50s. When he was in his mid to end late 30s, he went to Germany, and that's where he kind of started to paint professionally. He then did an exhibition, which I will talk about later. And as you can imagine, a Japanese guy in Germany in the mid to late 90s, he was not super happy, to be honest. And there was a bit of a culture clash. And as a result, according to him, he always slept during the day and he worked during the night, which is when he created this series called Sleepless Night. And you can see this kind of like a self-portrait. He's not super happy in the middle of the night being awake. That's kind of just to give you a little bit of background why this painting looks like this. He then stayed in Germany a little bit, went back to Japan, became a global superstar. Like I said, when he was in Germany, he did this exhibition with a local gallery where this painting, among others, was exhibited. This German gallerist is really a no-name in kind of the art world. You know, he lives kind of in a secondary city. I'm not sure whether he speaks English. He's like not a big player, to say it that way. That being said, people in the art world still know that this guy exists because he has a certain association with Nara. And we know as a fact that quite a lot of quite high profile people in the art world tried to contact this guy because they felt he may have access to good old paintings by Nara. But for some reason, and I really do not know the reason, this guy always blocked, whether it's cultural or language or wrong timing, I don't know. But the fact is nobody ever made any kind of headway with him. We also did not know this guy, to be completely frank. We just tried our luck, and with us, he was super nice and open. And through him, we got access to this painting, which was painted in '97, was then sold as part of the exhibition to a collector. That collector kept it for 27 years. And as you can see, we paid a little bit less than 1 million euros for it. If you look at comparable paintings by Nara, they trade at significantly higher amounts than that. And that's kind of a typical example for me. I would put this into the geographic arbitrage category, because the kind of the natural sales channel for this type of painting is you go to one of the big galleries in Asia or the US where the market is really huge and you sell it, and it would be quite easy. For whatever reason, this guy didn't choose this channel. Whether he didn't have access to this channel or he didn't want to use the channel, to be honest, I don't know. But fact is, he did not use it. And that's how we got access to this at a very attractive price. And that's, for me, a typical example. Now, the market of Nara actually goes up quite nicely, but that's not the bet we're taking. The bet we're taking is that we buy something for $1 million that is worth significantly more than $1 million, and that's what we want to do. So that's kind of gives you a little bit the approach in real life. So all the paintings that we buy have kind of special situations associated with it. And to maybe explain it in different words, it may sound stupid, but it's the reality. We're not allowed to buy any paintings that I, as Pascal, independent of my financial situation, could ever get access to. Because if I can get access to, you and you and you may have the ability to get access to. If there are more people looking at something, there's more competition, you have less pricing power. It's very simple. So that's why we only go through channels where we are either the only ones, or there may be only 2-3 other people looking at it. That way there's less competition and we have more pricing power. So it's not rocket science. The execution is quite challenging, but the theory behind it is actually quite simple. So regarding question number 2, in terms of costs, as I mentioned, the key way for us to make money is the performance fee. It's 20% of the profit. We charge a management fee of 1.25%, which we've already decreased. And to be honest, we want to keep decreasing it. I want to get it to 0, because for me, I spoke about alignment of interest a lot. For me, management fee is always a potential conflict of interest. And I want to show the market that we cannot just sit at the beach and relax. We really need to work hard and sell at the profit, because otherwise we cannot make money. The other thing, the other cost that you should bear in mind, which is a bit unique because that's how the art market works, because unfortunately art does not generate no cash flow. In fact, it generates negative cash flow because you need to pay for insurance, storage, transportation, conservation, etc. So you have actually quite a lot of operating costs that, say, in real estate you also have, but in real estate you have rents that cover these operating costs, and in art you do not. Over a 5-year holding period, that costs you about 2% per year. 2 times 5 is 10. So what we do is we actually, when we buy a painting for say 100, we actually collect 110. And the reason why we do that is because not only transparency reasons, but number one, investors pay for the maintenance for 5 years. And what I believe, and this goes back to alignment of interest, what I believe from the perspective of the investor is the biggest risk in this investment is not the financial risk. I think it's the holding period. So the risk that the painting is not held for 2, 3, 4, and maybe 5 years, but maybe for 6 or 7. And to minimize that risk, we create the structure whereby the investor pays for the maintenance for 5 years. If we then hold on to a painting for longer, because we make money on the performance fee, we as Partasio paid for the maintenance starting in year 6 out of our own pocket. And that way, we're commercially very much incentivized not to hold on to a painting for too long. And if you really do believe it makes sense, it's free for the investor. So also here, concept of alignment of interest. I hope that answered your questions.
Yes, thank you.
Anything else?
Do we have another question from anyone?
I have a couple. Thank you, Pascal. Very interesting presentation. So first question that you've kind of alluded to towards the end, when do you sell those paintings? So basically how you determine the holding period. And the second is more like a practical one. So you mentioned that you to start, one needs to one can get access to this, so to say, fund, or how should I frame it, as a product through the bank. Can you provide a bit more details? You mentioned it very briefly about those certificates. So yeah, if you can explain this in a bit more detail.
So in terms of the holding period, given our strategy where you really buy at attractive prices off market and you do not want to take a lot of market risk, from a pure IRR perspective, you're actually incentivized to sell very quickly, right? Because our estimate is not that the value of the painting will increase substantially over time. Our base case is it will go up a little bit, but nothing crazy. So it will actually reduce IRR over time. So from a pure financial perspective, we would be incentivized to sell very quickly. However, in the art market, to flip or to sell very quickly is not very smart. So we try to find the right balance to have like a holding period of say between 2 to 4 years, depending on the painting and depending on the artist. And then we obviously sell opportunistically via the channel where we feel like we can maximize the sales price. In terms of the investment, it's a so-called actively managed certificate. So it's a certificate. There's a term sheet. And there's an ISIN. I assume you probably know what an ISIN is. So it's like an identification number. Each stock that you buy has an ISIN. So the way the process works is you take this ISIN, you go to your bank and you say, I want to buy X Swiss francs of this ISIN. And then the bank buys this on your behalf and you can see it in your account statements. Now, what I should say here is, this is a structure that is very, very common in Switzerland. All the Swiss banks are very familiar with it. Abroad, for me abroad, and not in Switzerland, it really depends a bit on the bank. There's no legal reason for a bank not to do it, but sometimes a bank could say, oh, this ISIN, I don't know it, it's not worth my time to open the ISIN in my system. And unfortunately we do not have much control over it. Of course, if the amount is bigger, we will talk to the bank, etc. but it depends a little bit on the bank. So if you work with, let's say, a very local Slovak bank, it's very possible that they will say, no, we're not going to do this. It's a waste of our time. But generally speaking, it should be accessible to everybody.
Gotcha. And basically, you have several of those which relate to like a collection of 4 to those 6 pendings each.
So if you go to our website, I didn't even mention our website, but you can find it easily. It's www.partasia.com. You can register there. It takes about 5 seconds. It's more from a regulatory perspective. Then you have access to kind of the investment product that is open. We just closed product. It contains 6 paintings. So into this product, you cannot invest anymore. And we have another product open where we're very, very close to buying a painting, knock on wood. And we have enough money to buy 1 or 2 paintings. So there we at the moment both doing the fundraising and the sourcing of the paintings.
Yep, gotcha. And final question, anything in terms of taxation benefits or something that you are aware of, at least in Europe?
So, you know, I don't know it from a Slovak perspective, to be honest, and I'm not allowed to give tax advice, as they always say. I can only tell you for Swiss investors, it's a capital gain tax, which for Swiss people is very beneficial because there is no capital gains tax. But you know, from your perspective, you will need to check this yourself. Unfortunately, I'm not allowed to give you any advice.
Okay, understood.
But you will see,
Thank you.
You know, if you register on the website and you get access to the term sheet, you will see how all of this is described. And then, of course, if there are questions, feel free to contact us anytime.
Okay, thank you. Much appreciated.
Sure. Anything else?
If there are no further questions, I would like to thank you, Pascal, for your presentation, and I'll talk to you later. Have a great. Thank you very much for joining, to all of you. And just like I said at the beginning, if you did not catch the whole presentation, it's going to be posted online on LinkedIn and on our YouTube channel. Until then, have a great day. Thank you very much.
Thank you very much, everybody. Thanks for having me. Hope it was interesting.
Thank you.
Thank you. Nice
Take
day.
care.
Bye-bye.
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 Thanks, Pascal. Bye-bye. We see each other in Zurich.